Recording in progress. All right. Yo. What's good? What's good? What's good? Man, it's been a long while and now I'm back. No upgrading. No upgrading though. Robert Williams here, the emotional trader, and back with a it's been a minute, you guys, but back with a video on back testing. And was recently just having some fun. A lot of things that are going on in the market have just been crazy. I'm not really here to give any type of market analysis, but just making a video about back testing because I like to do back testing and it was fun. But I've been working a job and taking care of the family, so it's been really busy. But I wanted to share this back test that I've been recently doing on a particular strategy and bring it to you folks here. What we're looking at right now is Thinkorswim onDemand. And I've been trading a particular strategy where it's more of a short-term trade on options. It could be intraday or it could be very short-term swings, right? So I'm in for about a week or two at max, right? Week or two at max, but you're really looking for just some quick pops based on the trade setup. And was doing this trade with American Airlines. I went all the way back to 2016. So what we're looking at right now is July of 2016. Before I get into the strategy, I might as well just like kind of show you the results of this particular trade. So I started with this back testing January 2016. And right now at this point, I'm at July 2016. And I have been extremely busy working my job and trying to do this back testing all at the same time, which is pretty tough. And with 5 kids, sometimes it's just like no privacy and you don't have time to really do all of the back testing. But let me go ahead and show you the results of this time frame, and then we can come back into Thinkorswim and take a look at exactly what it is that I was doing and the way I had the chart set up to be able to do this back test. So let's go over here to my Excel sheet. And as I mentioned, this is just an Excel sheet that I have as a tracker that I utilize even for my personal training when I remember to update it, which is bad because you should update and log, right? It's always good to log your trades and even talk about why you got in, why you got out, what were you seeing, what was in the market, right? That's the best way to really keep holding track of your trades so you can learn from them going in the future. I have so many Excel sheets that I should just really go through. So think about what was I going through at that time frame in 2007, 2018, 2019. And if you look at some of my tracking sheets of my real trades and some of the ones I've tracked for paper trades, you're like, dude, you have gaps of where you didn't do anything. It's like, yeah, because I was working, was busy, or it was just family, or it's like, I fell asleep and didn't get to go and do some of the stuff I wanted to do. Nonetheless, so here's the tracking sheet for trading this strategy that I'm going to show you. And this is all of these trades are on American Airlines. Okay. Again, back in 2016. And I even actually got so lazy to where I was just actually acting like it was January 2022 when I was doing my dates. So I actually need to fix this. I guess it's just very tacky, but I'll just do this with you right here. Change all those from 2022 to 2016, replace all. Thank you. Close out. Okay. So literally going back in onDemand on Thinkorswim, going back to January 2016, looking at the trades to see exactly what it is that the market was doing at that time. And as you can see, these are the trades of tracking. They're all either a call or a put option. So this has the purchase date. This column here would be the expiration that I selected in the onDemand. This would be the strike price that I picked. This would be how many contracts I purchased. And then this would be the purchase price of the contracts on the purchase date, okay? So date that I bought, expiration, strike, number of contracts, purchase price. These next two here would be my sell date when I sold that option and the price I sold it at. And then the column with this red and black ink, as you can see, is going to be my profit or expense, profit or loss. Also, the other two things that you can measure here is the entry, the cost of entry, and what the ROI was. And I actually noticed I got to change one more thing over here. I got to change this as well to 2016 because days in play is not 2000 days in play. That is wrong. I'm doing all this with you guys here live. I know what I want to do in my head, but I didn't write all this out. So you're really getting this from the dome. Okay. And it's late. It took me about 50 minutes to put my kids to sleep so I could come and do this. All right. So profit and loss here, your entry cost, and your return on investment, and how many days you're in the play. So as you can see, these are some short days of being in these plays. Okay. Like I said, very short, like swing trades. If we look at the average time we were in the trade was 3. Average time frame in these trades were 3 days. And it's a total of 39 trades, right? 39 entries and exits, full on, in and outs, 39. And it ranges from January 6, 2016 down to June 22, 2016. As you can see, there's a lot of red. There's a lot of losses on this. And then there's some good profits though. Some of the things here that are significant are the return on investment. The losses were, pretty high in a percentage standpoint. But then you'll see that the winners and profits were all pretty handsome, over 100% ROI in these cases on the winners. So this is me tracking each and every single one. And I can even show you in on-demand, obviously, where I got these particular numbers from. There's probably 1 or 2 trades that I didn't put on here because it was something was funky with Thinkorswim, but I'll show you that. Also, the pattern is really not a pattern, but I put over here whether they were puts or calls, right? So this, as you can see, the first 3 that I have over here were all, these were all calls that I did. And then the next one I did was a put. Again, all with the same strategy, all with the same setup that I was looking at that I'll show you in a minute. But all in all, here was the results. I did create a little chart to see, oh, you guys probably hear my daughter crying in the background as she's being put to sleep. Yeah, you can hear her very heavily. So here we have a chart that is pluses and a bar chart, not pluses and minuses, but a bar chart that is measuring the profits and loss. So this is taking all of the data from this section here, all right? And let's see here. Let's go ahead and take a look at, I just had to take a short little break because that child was screaming and crying and it's not going to stop. So might as well continue to push through it. But this chart I created here is of the profit and loss, right? So obviously, and it's counted by trades. So you have 39 trades across the horizontal x-axis, and the y-axis is looking at your profits and or your losses in this case. So here, if I just make it a little bit bigger so you can see, so these were losses, right? The first trade, a loss of 216, and the second one, a loss of, what is this one? Is it going to tell me? No, it's not going to tell me on that one. It's okay. But the third one, a profit of 583, the fourth one, a profit of 980, right? So when you see the chart, you're like, you see this here, and you're like, dude, that's a lot of red. Okay, let's put it in a chart perspective and take a look at it. And what do we see here? We see, okay, well, there's some actually good numbers. My bars on top for profit were a lot larger than the bars on bottom that were losses. okay? But then I took it a little bit further and drilled down to some matrix or some metrics here for some statistics. So we're going to zoom in some and we're going to take a look at this. And I thought that this was the significant part. And this is why I do like doing back testing, because this is some of the things that you get to see. Now, the toughest part is implementing it in real life, because you have to get past it mentally, right? Trading psychology is more important than the trades itself. You can know what to do, you can have the exact game plan, but when it comes time to do it, you just may be trigger shy, or just like, oh, I think it should do this, or I expect it to do this because of what I see, and you just don't do it, because what if you're wrong? Then that's loss of real money out of your pockets, right? And you feel like a failure. But this is interesting. Like this is ridiculously, like, this is crazy how this can operate and work. This also, keeping in mind, doesn't take into cost like the cost per contract and stuff like that. All right, I can't measure all that. All I can really measure is what I purchased it for, what I sold it for. But let's say you had an account balance of $10,000, right? And that's why I have this here. If you have an account of $10,000, that's your balance. On every single one of these trades, the average investment was about 500 bucks. And I mean, that's because when I was doing the trade, that's particularly what I was looking for. But we can go here and look at what the average is. And the average was about, well, 475 on this one, right? Based off what it says that I tracked. But I was really looking to do trades that were, I didn't really want to go above 500, right? So average trade size that I did was $500. The average return, taking a look at all of the profits and losses, right? The average return on that equation was $190.10. So out of the 39 trades, I did, so if I took 39 trades and made a profit of 190 on each and every single one, that's how we come to the same results. My average ROI over the course of all the 39 trades was 38% profit, okay? Took 39 trades, average ROI of all of them, 38%. Average monetary return, $190 per trade. And I invested about $500 per trade. But now if we look at it from the overall scale, what did that result in? All this red and black that you see here on my profits and loss, they came to a $7,000, $7,414 profit at the end of the 39 trades over 6 months. The return on the account balance, again, if you had a $10,000 account, the return on that account balance was 74%. The number of trades I did was 39. The win percentage was 56%. Loss percentage was 44%. So I profited on more than half the trades, which is also good too. The average win ratio was 157% on the average not average win ratio. The average ROI on my winning trades, on my profitable trades, was 157%. 158 if you round up. But the average return on investment on my losses and expenses were 47%. Now that doesn't seem too sexy, right? Especially if we scroll up and look at some of these, like look at that one there, that was a negative 77%. That was a negative 71%. That was a negative 19. That was a negative 39. That was a negative 54, 58, negative 91%. Like I lost all the money pretty much on that one. Negative 67%, negative 95%. Like, what were you thinking, Robert, as I was even doing the back testing? What were you thinking? But at the end of the day, still doing the exact strategy, I still came out with a 74% return on my account balance. Therefore, at the end of the day, I am a winner, right? In this back testing, this is a successful or a good strategy. Mind you, I only did it on, I only did it on American Airlines. Mind you that it is only the first 6 months of 2016. I will continue to do these, but again, it takes a lot of time to do back testing. But 39 trades back testing during a 6-month time frame is pretty good. Although I do want to do a whole year because we know that there's different aspects of seasonality. But this is all based on technicals, right? No like market tone or no understanding of what was going on in the S&P and what was going on in the news then. And so this is pure technical. Don't know nothing about what was going on in 2016. I wasn't even trading really at that time. Like I probably had a 401k, but I wasn't paying not near net attention. But so that's what's significant about this too, is the results that you get out of it. Because I'll tell you, as I was doing the back testing, it was like, dang, yo, like you heck of losing. But then now when we put it all together, it's like, bro, you winning. You won significantly. Okay. So this is I tracked it on the Excel sheet so I can draw this stuff up to be able to share with you as I do the video. And kind of just lead with this so you can see like, okay, this is the results of what he did. So let's go over to, and forgive me if my computer runs a little slow because I got a lot going on it right now. But let's go over to Thinkorswim, right? So if you have TD Ameritrade and you utilize Thinkorswim, again, the on-demand is great for back testing. We're already in the on-demand right now, where it shows the, what my account is or whatnot in this situation. But this on-demand button is typically in the top right corner of your Thinkorswim. You click on that and it brings you to the on-demand. And then you can go in here and you can pick the time frame in which you want to go to do the trade. You can pick your stocks. You can work off your watch list that you really currently have. You can work off of whatever it is that you want to work off of. And it's dripping and bringing you the time that it was back at that time. And I can't remember how many years Thinkorswim has, but this is why I really love to use Thinkorswim and not any of the other platforms. But just to show you that it's real, of everything that I did over there, the numbers are a little bit different here with the total, right? When you do a clean sweep of your on demand, it's $100,000 that they give you. You can change it, I think, to 50 or whatever number that you want, I believe. And but this is different of 66,958 of total return on doing these trades, because like I said, there was one or two that were funky, that this one right here that just shows as like a big expense and I wasn't able to get out of it. That's why it still looks like I'm in it. I don't know really what happened with that one. But these are all the trades that I did in on demand and like literally pull triggers on to do as I was going through it. And it shows you all the P&Ls for that time frame, right? So the P&L in here is going to show less than what was on the Excel sheet because of that one or two anomaly. But again, let's say you had a $10,000 account, and at the end of all these trades, you're profitable here, $6,958. You pretty much had a 70% return on your account balance over 6 months. That's huge. But also too, this is all the fills and everything that it does, right? So to put all that stuff on the Excel sheet, I went in here and I printed this out. And on an Excel sheet, I jotted every single one down because it's easier to do it that way, so I can make all that stuff with the way I wanted it to. But this is to show you here, this is me putting on each trade. And no cap in my game, no reason to manipulate and say, oh, I went to the future, saw what it did, so then came back and made this look good. Ain't nobody got time for that. Ain't nobody got time for that. And it's on demand back testing. Like, I ain't got time for that. Not capping on no paper trade accounts like I'm balling. So let me show you the strategy. I'm going to show you all that just to be like, look, I actually did this stuff, but you could be like, whatever, you could be lying anyways. So this is my chart setup, but what I went and did here is I utilized the flexible grid. So what we're seeing here on this flexible grid, we're again at July 1st at this moment in time. And let's just continue from where I was at. We're at July 1st and it's on pause right now. So I'm gonna go ahead and click play. I do not know why it's not showing on my 30-day chart, but I'm probably gonna get this fixed in just a second. I have it on. So this chart that you see on the left-hand side here, this is going to be my 30-minute intraday chart. And the way that this one is set up, let me see, why is it not showing? Let's change it to a different stock and then take it back to American Airlines. There we go. Okay. So my setup here on this chart on your left is a 5-day, 30-minute chart with the 8 EMA, exponential moving average, on the blue line, and the red line is the 34 EMA. So you got an 8 and 4 on the 30-minute chart. On the right-hand side here, on the bigger chart here, this is, I think this is what, 3 months daily, I believe I have it on. Yeah, 3 months daily, because I just don't need too much time on this. And this is my like normal setup, a lot of moving averages, and the gray line is the that's tracking the S&P 500 at that time. So this is a 5, 10, 20, 50, 100, 200. So these are exponential on the 5 through the 50. The dotted lines are simples, I believe. Yeah, I think they're simples. And then of course their volume on there. And this chart down here on the bottom left, this is the chart of the option that I would have selected, right? So if I'm picking, if I pick the option, then I would go and send it to this, it's blue, right? I indicate, these are yellow indicators on here so that those line up whenever I change something. But then I can send the chart of the option to this blue icon, and then it's going to pop up the chart of the option for that. So I don't know if folks, you guys know that you can do that. I know you can do it on bar chart. You can do it on a lot of, almost everything. But that's how you do it there. So I'll show you in a second. So here's the trade setup. The trade setup is as simple as this. I hope I say it right because I didn't rehearse it. And I'm going to go off the top of the head. We're typically looking at, obviously, your daily on the chart to see where the stock is. I'm using Fibonacci lines to kind of gauge retracements or even targets of where it can continue to fall to or continue to go to. But the entry is determined based off here, the 30-minute chart. So what we're looking at here on the 30-minute chart is I'm looking for the stock to create a higher high and a higher low after the 8 EMA crosses over the 34 EMA. So I'm looking for a higher high and a higher low after the 8 EMA crosses over the 34 EMA. Inversely, if I'm playing it to the downside, I am looking for a, and I'm going to get rid of the Fibonacci lines because all the lines are killing me. Inversely, I'm looking for the 34 EMA to cross, or for the 8 EMA to cross below the 34 EMA, and for it to create lower lows and lower highs. So essentially, if we were to take a look at this time frame here, there she goes crying again. Right now, obviously, this was in the downtrend, and as you can see, this is lined up with this over here when I move my cursor. So you can see it fell from the fell off. Of course, I don't know what it is because the news we're doing strictly technical. So American Airlines fell off the face of Earth, right? And it drops, so it's down. And I don't know if I got it in that one. I'm not too sure. But on the way back up, what again we're looking for is for the 8 EMA to cross over the 34, and we're looking for the stock on the 30-minute chart to create a higher high than its previous high and a higher low than its previous low. So in this case, we had some movement here in the pre-market where it broke up and it created a higher high. So here's the recent high. We had a low, lower high, and had a higher low. And we come over to the next day And now we have a higher high. So this high, even in the pre-market, this high is higher than this one. And so now I'm looking to see, okay, will it create a higher low? Meaning that if it pulls back down and comes down, will the low be higher than this? So that means it can come up, it can come all the way to here, and then it can continue to move up and create a higher high, right? Looking for something like that. This seemed to just done some floating on the ADMA after it crossed it. So technically it's creating higher highs, and the next high that it needs to break above is the high from the previous day, which is up here at 2690 area. And so if we take a look at it, again, we have pretty much the high. We have a lower low than the previous day. And then we have a lower high because it didn't break this one. And then we come here and we actually have a higher low because this one did not break this one. The next day comes, we have a higher high than the previous one. So we have this high, it's higher than this one. And then it just continues to floats. And now we're still higher high than this one and this one. Has a little bit of a pullback. So this would be our low, right? And this is a higher low than this one, and a higher low than this one. And the 8 and 34 EMA crossed, right? That's key, the 8 and 34 EMA crossed. And then we had the higher high, and we had the higher low. Now we have another higher high, and it kind of just went flat before it ended the day. So I'm not in on anything on this one particularly because few things, but mainly I was really wanting to see it break this high because that was the real major one, like just a big fall in the morning. We've seen that. And then, you know, things come back up to it and they break down lower. But one of the other reasons why I kind of wasn't in it either is because we're such a significant downtrend here, right? On the daily, I was like, I don't know. I don't know if it's gonna, maybe that's just a fake back to there. And it's just gonna continue to fall more. So I didn't, you know, this is not on the paper trade. I don't think I entered into anything on this. Did I actually? I don't think I did. Oh, let's check. Did I enter anything on the fill order? No, the last one I did was on 623. Entered on 622, exited on 623. Oops. So I think the last one I did was exit on 622 to 623. Oh yeah, I thought it was gonna go up. And psyched me out. I think because that last one was a loss. So now, as we look at the 8 and 34, again, this would trigger your entry. You'd say, okay, the 8 and 34 cross, I have a higher high, a higher low, and now a higher high. You can feel comfortable at that point to say, I can get into this trade for a short-term, you know, a short-term play. You could do long-term, but a short-term play is how we were looking at these in a sense of going up. All right. And so then the next day pops up and creates a higher high again. So you have this higher high is higher than this one, or this one, and more significantly, this one from 2 days ago. And then it just continues to float and ride. Back this out. It pretty much popped up and it continued to float and ride the 8 EMA on the 30-minute chart. And then as you can see, it continued to do all this. So then even when this pulls back here, what do we have? We have a higher high, and then we have a higher low, right? Because our previous low is that one back down there, and these down here. And then we kind of went flat, but kind of created a high, but, you know, kind of hit that same ceiling. But here's our higher low, here's our higher high, here's our higher high, pull back, higher low, and it looks like it's just continuing to do its thing. So at this point in the trade, you're kind of late. We wouldn't enter anything here. Your entry day would have been back here on this after the cross, and it created, you know, the first higher high and higher low on the 30-minute chart. And then on top of that, as we look at the chart here, we are at the 20 EMA as our resistance. And the time frame here is at 12:53 p.m. Pacific Standard Time, because I'm on the West Coast. So the market's going to close in about 7 minutes. So the way that I was doing it was obviously just going and looking at certain times of the day, right? And I'm actually going to fast forward it to where the thing moves every 3 seconds. But I was pretty much opening up at July 1st. I'm going to go to July 5th over the weekend. And I was going to typically 6:45 a.m., which is 15 minutes after the market opens for us on the West Coast. I was going to 10 or 9:45. Then I was going to 11 or 12:45. So I was trying to just pick 3 different spots. And once I saw that it may be in that range of something I may want to look at, then I started to drill it down a little bit to the smaller times, right? In the way that I was doing it. So let's go to 6:45 a.m. We don't do it fast enough. Let's go to 6:45 a.m. the next day. And this is the part that this is what I really like. Thinkorswim for this. So we're gonna go 6:45 the next day. And here's our action. We haven't, I'm not looking at any options at this point in time. I'm just looking at the chart and what it's doing. So we can see 2 things. One, it looks like the 20 did act as an area of resistance for us. So on the macro, but not weekly macro look and view of it, we look like, okay, we hit the 20, we can be heading down. And has it done that? Well, it's been riding the 5 down, came up to the 20, broke through it and pinched it, but then broke back down below, kind of came up close to it again, fell off the face of the earth, don't know what that was. And then we came up to the 20, hit it, and it seems to be acting as resistance. So that's on the daily chart. Now, as we look at our 30-minute chart, what do we have going on here? Well, it looks like our 8 and 34 may be crossing soon. We definitely didn't create a higher high to keep with the momentum. We would have to have broken above the 20 EMA. And we've created a lower low than these lows here. So kind of the next low to break would be, you know, the open of the previous day, at that 28.50. And it looks like it's getting the momentum to be able to go ahead and do that. So we're not at an entry point here yet, even though you could be speculative and want to enter, so up to your risk tolerance. But seeing that this looks like a potential possible entry, I'm going to go to 8:45 on the time frame. So let's jump over to 8:45, because I would imagine that this is probably what you're doing during the day, not watching it minute by minute. All right, so 2 hours later, we have on the 30-minute chart, we've created that lower low with the wick, or maybe what is that the same? That's the same, huh? Low 28.19, low 28.20. So a penny, a penny low, lower than that low there. But it looks like our momentum is shifting, and it looks like also too, that really is looking like it's going to be our resistance. Now we're still early in the day, we don't know, but again, based off the setup, again, purely technical, what am I looking for? I'm looking for the 8 to be crossing below or over the 34 EMA on the 30-minute chart. And if it's going down, I want to see a lower low, which it already broke that low, and seemingly this one, and then a lower high. So I want to see a lower low, come up, lower high, and then continue to move back down. And that 8:34 is crossed. So instead of going out another 2 hours, let's go out 1 hour. Now, mind you, yes, we may miss something that can happen in the next hour, but shoot, you're not about to do all that when you're back testing. You ain't got time for all that. Trust me. Trust me. It'll be like watching whole market days. You're not going to do that. I could, but I don't think you would. So here we are where it's pulling back up, and it looks like it was using the 5 or the 10 as some support. Some buyers are stepping in there. But if, let's say this is the lower high and it's going to start pulling back down, then that's probably where that's like our ideal entry there. So let's go an hour out again to 10:45. And even though I know my time is changing here, I like to still do those 45 time frames. All right. If we zoom in here, we didn't create a higher high. Again, we have a lower low, and it looks like we have that lower high there. And we also have where that 8 has crossed below the 34 EMA. So I'm thinking this is a good time to get into a put, probably early in the process, but a good time to get into the put. And the other aspect too is you've had a falling day, you had some recovery for 4 straight days up to the 20 on lower volume each day it's coming up. I think you're a little bit tired and the fall may not be over. Again, I don't know the news. We're trading off pure technicals. So pretty much what I was doing is, okay, we're here on Tuesday, and I would be looking for an expiration that's pretty much a week to 2 weeks out. Now, I wouldn't pick the 8th in this case. It's a little too close, even though it can really like do its thing. But also may want to give myself more time if it's going to take a little bit longer, or maybe have a sideways day or two, because when you do shorter term expirations on the options, that theta can kill you, that time decay where it just eats away at the intrinsic value. And you want to sometimes give yourself some time for that, unless you were like extremely confident you knew that that bad boy was going down because you had some insider information. So I would be looking for a expiration for the 15th of July. And I will be looking for a target. Where's our target in this case? Where do I think it can fall to? Well, based on what I'm looking at for the higher highs and higher lows, it's kind of already peaked that one. So I would have a target that it goes down to 28.24. And I know these small numbers, but when you look at the option chain on American Airlines, it's some small amounts that you're paying too. But we're definitely seeing that as a target. But really this one down here, 27.50 as a target. And that's about $1 move that I would be pretty happy with, just to get back down to that one in the course of the next couple of days. That's ideal. If we throw up Fibonacci retracements, if I were to use this retracement line here from here to here, no, that doesn't look like a good one. We're trying to predict some prices down here. So that's that line. That's not really ideal. But if we go here, I do not know if you guys can hear that climb. Looking from the previous swing high, swing low, that would put it to where we're already made it there at the 161. If we take it here and we see this fall, that means it came back to the 61% line already, and it could fall to the 50% line. So the 50% retracement line, let's zoom in again. The 50% from here to here, if it was retracing all the way up, it fell, it's retracing up, it hit the 78% line, and it came down to the 61% line. And then I'm thinking it can continue to fall and go to 50 with that, 50% retracement line with the 20 EMA on the top. That's a little bit of a quick analysis. But, and in that time of talking, that candle has turned green. But if we look in at saying this is our, again, this is our lower high, then we would still be legit to get in because we have the cross of the EMAs. So let's go to the option chain. And again, so we're picking the next Friday, and my target was pretty much 27.50, and that one's selling at 44 cents. Again, we're looking at this spot here, 27.50 as the target. Back to the option chain. So we're going to go 27.50. And on this one, I think I can pick up like 11 contracts, and I'll be at about 500. 484. Yep, well, that's good. So again, like I told you on the other thing, only $500 invested in each, about $500 invested on each and every single one of these trades. So the great thing is I can go ahead and just send that in. It's going to pop up a thing up here on the top left. Boom, got in at 43 cents. You just do a limit order on the thing and it'll get you in there. So now when we go to our monitor, we can see our trade was entered in here all the way down at the bottom. I'm gonna scroll up and we're gonna shrink that. And then also now we can see our trade here. Okay. So we're gonna utilize this to monitor the profitability on that. And then as I mentioned, for that other chart, I'm gonna send this to blue. So now when we look at the chart, we have our daily, we have our 30-minute chart, and we also have the option chain here. We have the chart on our particular option and where we got it at, okay? All right. How did it move to 11 o'clock so fast? Wow, time be flying. All right, so let's go to, and then so after I get in, I was doing about an hour. I was looking at like every hour. Let's see if something significantly changed here. So let's go an hour out after getting in the trade, 11:45 a.m. And we can see here on the 30-minute chart that it starts to still continue to creep down. And so I'm pretty happy with what's going on so far, all right? It takes some time to buffer, but pretty much it quickly buffers your chart. So you can see if it did what you wanted to do on the chart. You can always go over here and see like, oh, well, what's the profit? Well, still nothing right now, but don't waste your time doing that because sometimes it can take a while to buffer. So let's go to 12:45 so we can see what it's looking like towards the end of the day. And it's looking like it's reversing on us. All righty. This is where it gets thick. Let's pull this in. So it hasn't broken this high. So seeing that now, we had a high, a higher high, higher low, about the same high. Then we had a lower low than all the previous day, pretty much. We had a lower high. Then we had a higher low, because this is higher than this one. And then we had a higher high on here, and it looks like that 834 is about to cross. So ideally, if I'm going to stop out of this trade, I really need to see it break because I have a little bit of time. I didn't buy an expiration. You know, we're here on Tuesday. I didn't buy an expiration for Friday. I bought one for next Friday. So I have a little bit of time if this thing is going to start to eke up some. But ideally, if it breaks above, you know, the highs from the yesterday, you know, breaks above the high from where it opened on this day, and breaks above those highs from yesterday, then I want to stop out. But let's see what happens tomorrow morning at 6:45. And this is exactly how I was doing this paper trade. Now, aren't you glad you stayed in? So this is 6:45 the very next morning on the paper trade. And it obviously is already blown below. All right, it's fixing itself there. This is all the buffering and now it kicks in. Okay, so it's at 27.28. It's already below our target, right? So as far as the target process goes, we've hit our target. We have, again, it obviously creeped up some towards the end of the day and then continued to fall more, all in pre-market and gapped down, like gap down. And now, according to the chart, we're at about 97 cents. So if we go over here and we look at our position is already up 127%. We got in at 43. According to Thinkorswim, it's about 98 cents right now. So $100, I mean, 100% profit overnight is awesome. Now, yeah, like if you picked Friday's expiration, you would probably be even more excited because probably, I don't know what that percentage is, but we didn't pick it. We picked some time for ourselves. So what we can do is continue to see how it's going, or we can set up a stop loss even in, you know, a stop out, not a stop loss, but we can set up a stop out even in Thinkorswim on the platform, right? On the on-demand platform. So if I wanted to set up a stop out at, let's just say 100%, I'm going to right click here, create a closing order. and 100% would be stopping out at 86, right? So I would go set me a stop to where it'll do a market order. If when the system shows that it hits 86 cents, then we're out of there, okay? So that's what we can easily set up and do it that way. What I think I'm gonna do is write it for an hour. Let's see what happens. So I'm not gonna put this order in right now. So let's go back to the chart. Let's see what's happening here. So now it's popped back up. But when you see a gap down, obviously that's telling you something. So, you know, it's created this lower low. And now, even if it comes up to create some type of high for the day, it'll be a lower high. Because here's your highs, and it'll come up and create a lower high. I'm not even measuring anything back here. I'm really still basing it off of the previous day or the one before it. That should come up and create a lower high. So let's go an hour out because it's obviously got nice and juicy in the morning. Let's see what it's been doing. So it's continuing trending down. Okay. At first, it looked like it was bottoming there at the 2720, but then it broke below. The wicks matter on these shorter time frames, in my opinion, as well. Let's go out another hour. That buffering kicked in some more. All right, so now we're up at the 80 MA on the 34-minute chart. Okay. So it's pre-buffering. And now we're back and looking at what is legit. So even as it comes up and creates its, in this case, it's creating its, recovery sum for the day. Now, what do we have as resistance on our intraday chart on the 30-minute? We have the 8 EMA to see if it'll push it down. And even if it breaks through that, the 34 EMA could be the thing that pushes it down. Just like also it was riding the 8 EMA on the way up. And sometimes if it broke below it, like in this case, the 34 EMA said, no, you're still good, continue to go up. So in this case, we can potentially we should expect to see the 8 EMA continue to ride this thing down, even though we are pretty much at our target. So let's see what our profit is at this point. And our profit is 96% at this point. So still a day later, obviously I didn't look at it when I pushed it out an hour before that, but let's see what continues to happen. I'm sure this is like what your thought process is gonna be while you're in the trade. Or maybe you're like, shoot, 100% overnight, taking it and running. Well, let's see what's happening. So it's looking like it's staying in that area and it's starting to curve some. What I will tell you here too, is that this hour later, your profit on your profit is going to be less, 81%, even though it's around the same price. The time decay is working against you on such shorter term trades. But let's go to 10. Go to 1040. Take a sip of water in my mason jar. All right, so now we're flattening out, and it's like, yo, what's going on? Is the 50% line on the Fibonacci holding? Like, what's going on, bro? You seem to be holding here. You had a high of 2788, 2788, 2787. Maybe you're getting weaker, I think. I think it's getting weaker. And then if we look at the thing, again, our ROI is lower, again, because time decay. So now we're at 74% profit. But our volume is higher too. Higher on this day. There's going to be some pickup. I don't know. Let's see what we got an hour later at 11:45. Ooh, it is holding. It is holding there. So let's see. We had 2788 is the high, 2787 is the high, 2785 right now in this small time frame. our lows in these areas here, because here we are again, lower low, lower high, but we have these higher lows here, but everything is staying flat. Maybe this is just like, oh, we sold off and now we're having some recovery. Let's see what's happening. And the high 2780, these lows 2758, 2760. Want to see it for an hour. Again, expiration is, I mean, how many more days do we have? 9 more days for expiration. Again, your P&L is less because of time decay. But let's go to 1245. Now you're pissed, right? Now you're upset because you're like, dang, should have just took that 127%. I know, I feel you. Even right now, on demand, like this is how I was feeling doing some of these trades. I'm hot, like what the heck? And now we're down to a 16%. All right. So according to Thinkorswim, we started the day over 126% ROI, over 100% in one day, overnight trade. Now at the end of the day, you're looking at 1628. Still profitable, but you're like, the heck, man, I could have had over 100%. What was I thinking? So what do we have though on the chart though? So we still have at a lower, lower low, lower high, higher low, higher high, looking at this previous high of the day, higher high, I'm pointing to this. But now it has to get above these highs. And then this would cross to show that we're on the opposite side. So here on this day, as I mentioned, we would be looking for it to stop out when it broke above this area. In this case, since we were down in some major profit zone and we see it pulling back, taking away some of our profit, this makes it harder to say again, like, all right, how am I going to weigh this? Am I going to exit because it's broken the high of this day and now it looks like it's going to make a charge up? Or am I going to look at over here on the longer term, on the daily chart and say, okay, well, now it's below the 5 EMA and 10 EMA. Am I just going to let, like, that could be, and it should be a resistance here. We had some recovery. Maybe the volume is from buyers coming in because they liked it because of the price drop and it was really good. So really at this point in time, it's, it's up against, it's Tier's trading strategy. Mine at this point, seeing done 39 trades of this and still came out on top. I'm in a profitable mode right now. Yes, I can cut, not even cutting losses here. I can just take the small profit in because I'm like, I think, you know what, I think it's going to probably go up tomorrow. But just at the same thing, it can go down tomorrow, and it kind of filled the gap. Will it continue to punch up? Now tomorrow, if we open up, I'm going to take a look at this tomorrow at 6:45. Tomorrow, if it pops up and now it's all in this jazz, all up here, best believe the 8 has crossed over 34. I'm out, and yes, it'll be for an expense. No profit there. Even though right now we're looking at a 17% profit if we were to exit. So let's take a look at tomorrow. I'm going to take a look at tomorrow and make it jazzy. Dang. Like, should have exited, bruh. Should have exited. These are real feelings that be coming through. Should have exited that one, man. Negative 33%. So, like I said, it's coming. If it's coming up and it's shooting all into these numbers, I'm out 85,000. Peace. Take the loss. Boom. Sold it at 28. So then we go to not here, but we go here. We go here. And again, so that was 7.5. I'm gonna go to my Excel sheet. I'm gonna say 7, 5, 20, not 22, 16. And we did an expiration date that was July 15. So 7, 15, 16. We picked the 27.50. We got 11 contracts at 43 cents. 11 contracts, 0.43. We sold on 7.7. And we sold for 28 cents. Took an L of 165, 34%. This was save that when I save it. So that's how I was tracking each and every single one of these trades. Oh, yeah, I did the things, changing everything for me. Appreciate that. Some of the calculations on here are okay. So that's how I was doing each and every single one of these trades, ladies and gentlemen. That was it. Back testing at its finest. And with real, like straight up, didn't know that this was coming the next day. But now what are we in? We're kind of in that same position we were in the previous day before we entered in. We're coming up on the 20 EMA on a daily chart. And this is coming up to its previous highs. So now looking at it from the standpoint of moving into the upside on the 30-minute chart, you're going to say to yourself, okay, we have a higher high. And we have the 8 that is crossed over the 34 EMA on the 30-minute chart. And now you should expect to see a higher low. You should expect to see a pullback that's higher than, you know, this one, or well, definitely higher than these back here, but higher than maybe even these two are at the same area. And then you would expect to see that it continues to make its move back up. So now that we've already taken our L for the day, and we're probably salty because instead of taking 120% profit, we took a 34% loss. Again, risk tolerance. I'm going to go out 2 hours. Let's see what happens in 2 hours. Oh, so maybe even a nicer high. Didn't break the high of the 20 EMA. Looks like it bounced and hit it and then pulled back. And it's pulling back some, but it may be flat. So here you can feel like, all right, you know, I X out of that one, but it looks like we're going, you know, back up, and you can feel, you know, pretty hawkish, pretty aggressive, and like, yeah, let's do this. And just by looking at the 30-minute chart, you could be saying to yourself, okay, let me enter in right here. But you still have the 20 EMA on top of you on the daily chart. So you have to take a look at both of those and be considerate. So let's move out 2 more hours to 10:47, see what happens. Okay, a little bit longer time in there, looking like it's holding up right there too. And then it's not just falling. Let's go to 11. Go 1 hour out. Okay, but it looks like it's getting weaker towards the end of the day. So the 10 EMA may be looking like it's really solid as a resistance spot, because it's fading here. It's fading, fading, fading. But that's also like a flag pattern. Flagpole, flag. And what happens in flagpoles? When it pulls back to an EMA, it pops. This can be a higher low. So let's look at 1 more hour. Let's hope that, let's see if 12:48 shows us something of what we can do. It's looking really aggressive at this point. So back to the drawing board. We have higher high, now, obviously higher than all this, even higher than this day. You have a higher low that just came later in the afternoon. You have the 8 that crossed over the 34 in pre-market. And it hasn't broken this high yet, but this now puts this whole play in perspective to be able to burst through this 10 EMA based off what we're seeing on the 30-minute chart. So if you're a true trader, you'll just go back to the, let's go back to the drawing board. Where's our target? Where would our target be here? Let me get rid of. So it looks like pretty much after this, we're filling a gap to this candle here. So our target is 29.80, which is not far, but how I see it, if it's breaking through with some good momentum, we should be going to 30.50, a dollar, at least a dollar move. I'm looking for a dollar move on this. So let's go to $30.50. That's at 31 cents. What's this going to be? It's at 15 contracts. I think squeeze one more in there. Yep, 496, 16 contracts, 496 against another $500. Let's go ahead and enter that. We got in at 31 cents. And now we go to the next morning and see what happens. Ooh. It's so funny how I make that sound. It just reminds me of the sound or the feeling I had when we did this one. And obviously you see how that turned out, right? As an L. But we have a gap up. So it definitely filled the gap. We have a gap up above the 20 EMA, where it looked like we're going to definitely be piercing the high here. And then really the next thing that's in your way is, yeah, like 30.50, and then the 50 EMA, another dollar from you. Let's take a look at our profit here. So our profit is 61%. I'm really looking for 100 or more. And I think we can get that today. So we have this movement up, and let's go an hour later. All right, so it hit the high of $30.28, and it's pulling back. But again, it has a higher high and it has the higher low on the 30-minute chart. Nothing is saying that this is weak at this point. It could still be moving up. We're down at a lower, we're down at a way lower ROI from that morning spot because of time decay. This is just the thing with the short-term trades on the options. The time decay just really knocks you out. So let's go to 8:45. See, this is where you start to get like, all right, I'm gonna start looking at every hour. See what happens every hour. And then you may get, if you have time, you're like every 30 minutes. I ain't got time for it. So every hour. So it looks like we're creeping. So that 8 EMA is pushing it up and it's holding it up there. So I'm going to go to 9:45. And now it's flattening out. Ticking me off here, man. You're ticking me off. It's basing. But the same thing happened here, right? Flag pattern, pop, got a pop, and now we got a little bit of pennant, little flag there. 58% ROI, 288 after, a day. All these are good numbers too, until you like start to take the loss. Yeah, I should have put in that stop loss, huh? Just being real, these are real emotions that happen. Let's see what happens at 10 o'clock, 10:45. I remember going through days like sitting there trading, like shoot, just nervous as all get out. Heck of nervous. So, I mean, I don't know how you feel, right? So we're at 58% ROI still on this one. This is actually making me feel pretty confident that it was going like sideways flat, but we're still at the same ROI. That way that I would look at it still just longer. But no lie, you don't lie, but say to yourself, you would freaking like knowing that you missed out on 100%. Now that you got this 58% on this next day, that you just like decided to, yeah, I'm gonna re-enter because now it's doing the opposite of what it was doing. So I should just still follow the same setup on the reverse side. You would exit because you're like, shoot, I lost last time. I don't want to lose this time. And I totally understand. I'll do the same damn thing. Oh, it's running a Flizzat. But it's still above the ADMA. It seems like it's still just pushing it up. 12:45. Are you gonna fall apart at the end of the day? You're closing above the 20 though, and it's like if you're closing above the 20, I feel like you should be going further up. So we got some cool volume. Number 20. We're at 45%. I'm looking for 100. It's at your target though. It's not any, like not quite at my target. Got close. I think it could still hit target. So I'm going to see it Monday morning. You're like, oh, he's holding it over the weekend. Yeah. That's how we get good. What the hell happened? Damn it. Darn it. All right, sometimes this happens, you guys. When you're doing your back testing and you're moving fast and y'all saw me type 6 in there, but it just still went to the next day at 12:48. So now we know what it darn did for the day. You can't fix some of these things. But if we truly, let's not look at the profit, but if we truly went to 6:48 the next day, we'd be like, oh yeah, I'm so glad I stayed in this mug. It'd be like, oh yes, I'm a genius. I should have stayed in. That's what I knew. See, yep. That's why I stayed in. Because I'm smart. It's like, nah. You was scared out your mind. And you stayed in. But now, again, the move just says continue to watch what it does. So 6:45 the next day in the morning, we're at 127%. All right, this is what we're gonna do this time though. We're gonna put in that stop loss for 100%. And let's see what happens. So we do know what happened at the end of the day, right? Unfortunately, I'm sorry, couldn't stop that from happening. But let's go ahead and let's put in a stop loss. Oh, you know what I forgot to do this time? I forgot to send this to the blue. My bad. I forgot to send that to the blue so you can see that. But look at that. Pow! Popped up. Sitting there, hella happy. So let's put in, because I don't want to necessarily get stopped out in case it pulls back some. So I'm going to put in a closing order at like 60 cents. And if we just get stopped out, we just get stopped out. So stop. So when it hits 60 cents, it's going to just do a market order. So we send that in, and that'll be like right under that 100%, right? So that where that line is. And I think it's going to close us out. As if I recall correctly, it went below that number. So let's continue to go out though, an hour. Okay, so it moves up and we're like, oh yeah, great. We're still making money. Dope. This is awesome. I'm a genius. We're back over 100, over 114%, 145%. Okay. Let's go out another hour. Let's go to the 8. To 8:53. Now we're like, oh snap. It's about to get to the 50. It's about to get to the 50. So what we're going to do right now, then let's look at our monitor. So now we're at 187%, right? Now the loss of the 30% is nothing. Let's increase our stop. And here it is, like you can see it too, it's working, right? It's still working. I don't know why it's saying mark at 89. Oh, okay, yeah, that makes sense. Okay, so let's cancel and replace this order. Let's go up to 75 cents. So we're gonna replace that with 75. Since we're at 90, that means it'll have to be a 15-cent pullback on that. So we just replaced it, right? So now we have it stopping there, 15 cents off the mark. Okay, while it's at 190%. Now I know that like, oh, capture the 190. I so get it. Like if it was over 200, I'd be putting it at something that's 200. I get it. Capture the 190. I'm with you. But everything is also saying that this thing is going to continue to go higher. So let's do 945. Let's bring this back down. 945. All right. This is how we should, this is how you really should be playing it. I know we saw the end of the day, but this is how we should really be playing it. So now we're at 200%. It's really only 93 cents, so nothing changed much. Let's go another hour out. 10. I promise you, I'm not just running this up because we saw what it did for the day. Promise you. So here we are where we have seen higher highs and higher lows on a 30-minute chart. Now we see a higher, we create a higher high, and now it's starting to pull back some to the 8 EMA, and it's kind of coming close. It's coming close to our line. 31.17 was the high. Now you're like, okay, the thought process should be, it's pulling back some. Maybe it can really fall to my 75 cent. I'm already above the target, right? Because our target was here. And then the next target after that was the next target after that was the 50 EMA, kind of pretty much. And how many days I got left? All right, as far as this Friday. Let me just make an adjustment to my stop out to make sure like I can capture all the profit. Because if it's gonna fall, I don't want it to just like, I don't want to fall at 75 when I can get it at 86, right? So maybe you go in and you say, you know what, cancel the order. Let's change this to 80. That's still over 100%. If I get stopped out, I get stopped out. Right? Because what did you get in at? You got in at 30 cents. Didn't take my darn thing. Oh, I didn't change the price. That's why. Stupid me. Yeah, and that 30 cents. So now you're definitely looking good if you got 80. You're looking good if you got 100. Now you're definitely looking good if you get this, right? If it pulls back, it pulls back. And you're just stopped out. And it's okay. So let's go to 11:51, an hour later. It looks like you inched it out. Now, what does happen with Thinkorswim is that when you do punch out that time, if it went below that price, it's just going to exit you at the next market price that it kind of is, or like as close as what it would have been to your stop. That's what it's going to do. It's not perfect, but that's what it would have done. So it looks like it just never came down to wherever it set the price would need to be for us to be exited. And if we go to our monitor, we're back at 198. And let's just start to speed this up because I'm sleepy. My throat hurts. I haven't talked this long in a while. And I don't even know how long this video is now. Y'all gonna be like, fast forward through this food. All right, and so now we are at 31.44. So we have created on the 30-minute chart, higher high, higher low, higher high, higher low, higher high, higher low, this small one right here. Again, higher high, higher low, higher high, we would expect to have a higher low. Let's look at our monitor where we're at. We're at 269%. I'm popping this bad boy up all the way to 110. Now I'm like, I'm in such a good space. Take me out. Take me out at 110. I got 5 minutes left on the day. I ain't tripping. Go ahead and take me out. And I'm gonna sit here and let it take me out, but let the thing fast forward. So we did 16 contracts at 31 cents. So what day did we do that on? Seven, yeah, 7. So 7, 16. Same one. What was the contract for 50? 16 contracts, 0.31. Oh, we're about to get stopped out. It's like right there. We should be getting stopped out. Is it gonna stop us out? You only got a minute left in the day. Is it not gonna stop us out for this? Shit's going back up. There it goes. Got us out at 110. I was like, we should be getting stopped out for this day. Yeah, it pulled back and hit it. And then the day's over. So now the day's over at 1300 hours, 1 o'clock. And we got filled at 110 on, what's this day? 7/11. 7/11. So 7/11 got filled at 110. Profit of 254%. Oh, sorry. 7/11/16. So in this trade for 5 days. So on the previous one that we we're playing the downside on, could have been in a position to get 120% profit. We ended up taking a 34% loss on that one because we wanted to see if it was going to go ahead and continue. Then obviously when it flipped and started to move on the other side, we said, okay, if we pretty much using the same premise of the trade setup, we see that it's moving in the opposite direction. Okay, let's go ahead and take that. We decided and took a look at what our target could have been. And then we went ahead and said, all right, we're going to enter in on the trade. And then we just saw it move and we adjusted our stop accordingly. Now, in both cases, we could have easily taken the 100% profit on those, right? And we wouldn't have been wrong in that scenario, right? Kind of in a sense would have came out on top both ways. Or if you would have taken the, if we look at the chart, let's look at this real quick. This is some of the things we really got to consider, right? I mean, because these are the lessons that we need to learn so that we can utilize them for future trading. We entered here. It popped down over 100% in one night. That's pretty dang good. Take it. I get it. But with the gap down, I mean, I'm expecting to see it go down further. It didn't. We could have even exited here for just a small profit. We didn't. We just didn't. Or I just didn't. Not we. I just didn't, even here. But the next day, I'm like, oh, crap. Definitely should have done it. And we would have had a little small profit there. And then we got in, though, seeing that it was making its same move, and we rode it up to a spot to where it's like, this thing can continue to run tomorrow. We were just adjusting our stop losses because we were in a good position, and now we're coming close to our expiration, where the price of this, the data decay is going to kill like a lot of your
intrinsic value then. So you want to get it sooner when it reaches that number, right? You want to hop on it sooner when it reaches that number. Because then you'll have a higher percentage on your investment return there. So if you're less risk averse and you liked what you saw that morning, you take that 100 or you set that stop loss, and when it pulled back, then you were like, all right, great, I'm glad I pulled back. When it pulled back, you got stopped out, but you got 100% profit. You're like, cool, good. You watched it for the rest of the day, said, let's see what it does tomorrow. And you say, oh, dang, look, tomorrow it's doing the opposite. Let me go ahead and get in. And you write it up for a 258% profit, right? That literally was the position we were in. If I would have done that, I didn't, right? But we could have done that, right? So this could be so saying to us 80.86 cents. I took a loss looking to see more of the play. But if I wanted to just get it in because it was 100 overnight, this could have been what this chart, what this looks like. It would have been like 100% profit play and then a 200% profit play. But it wasn't. And you just got to live with that in trading. You really do just have to live with that in trading. And now we're up to 41 trades. And we're up to, I did all this math manually, so I'm gonna do that later. But nonetheless, so folks, that's what I was doing with this. I don't even know how long this video has been, longer than I probably expected it to be, but I'm gonna continue with this. So there's gonna be another part where we're just going through the trades again, and you can probably speed that up. I don't really do too good on editing and stuff. So you're gonna get all of whatever background noise it was and the silliness of how I be and my faces and all that stuff. Let's just take a look at the morning before we sign out of here. Cold world, man. Cold world. Look at that. Look at that right there. Look at that right there. That thing gapped up 7%, 7.5%, $2.32. We sold at $1.10, and it's at $3.17. Your 500 could turn into 45. But these are the breaks. It just ripped. I think I'm gonna have to do a thumbnail like watch till the end. Watch till the end. Look at that. God. Just 900%. Almost 10x. And you would have been in for 6 days. 6 days. Get the heck up. And again, I don't know what the news was. I don't know what's happening with S&P. I don't know what was going on in 2016. You know what I'm saying? Obama was still president, right? Yeah. No, not even at this point. I don't think he was president. Or maybe, I don't know. So, yeah. Anyways. These are the breaks, man. These are the breaks in trading. Why did I go there? I meant to go here. $3.35 now. Bruh. That's all I can say. That's all I have to say. All right, let me adjust these. Well, I gotta adjust all these manually because I just wasn't gonna bother with functions and stuff like that at this point in time. But I think at the end of the day, this is 18 and this is 23. And then, yeah, this was a number from taking a look at all those. I'll fix that later. All right. Hey, y'all. Thanks for joining me. Much appreciate you just hanging out with me, seeing all my facial expressions. I wasn't even paying attention to where the camera was. So hopefully I wasn't just too much in your face. I don't know. But nonetheless, appreciate you guys. Hope you enjoyed the video. More on this back test to come. I'm about to go to sleep. Deuces.